Taking a stand with a ban on Russian energy imports. What does it mean for the market and for you? Senior Wealth Advisor Brad White joins us on the floor to help break it down for you. Brad, thanks for joining us on the floor.
Yep, happy to be here as always.
Brad, we've all watched the news. The Russian invasion of Ukraine is heartbreaking. It's devastating. And the world has chosen to attack primarily with an economic sanction approach, reprisals. The U.S. is doing its own thing with a ban on energy from Russia. What does that mean for us?
Yeah, these sanctions continue to compound by the day. And so the big announcement right the other day was Biden announcing that the U.S. is going to ban imports on Russian energy and Russian oil. A couple things are important here. One, this is at the moment the U.S. only. The European Union did not make this ban yet. And the reason is because they are way more dependent on Russian oil than we are as a country, in particular, Italy and Germany. Okay. However, we are seeing that the UK and some others are now, even today, saying they'd like a plan to wean themselves off of Russian oil by year end. So, I mean, it's really a full-scale attack. As far as what this means for us, a couple things are important. Remember, the U.S., we produce a lot of oil. This is very different than the 1970s or 80s. We actually export even a little bit more than we import overall. And of all of our imports, Russia is only about 7% of it. So when you've seen this huge spike, when oil going up to about 130 a barrel, just about, that was really assuming the absolute worst case scenario of not only Ukraine and Russia, but keep in mind, we still have OPEC out there. We've got Iran and the Saudis who might have the ability or might decide to increase the supply to kind of offset the lack of supply we might be getting from Russia. So look, the reality is if I had to guess, I would say these high gas prices stay high for a while. Are they going to be as dramatic as the immediate reaction after this announcement? We've seen it come back already. And, certainly, God willing, that continues to stabilize to some degree. There are some other options, not just Russian oil, but it's probably some higher prices here to stay for a little bit.
Brad, one of the frustrating things for me is that the oil supply itself hasn't been impacted yet. What we're seeing is kind of the product of speculation. That's what people are paying for at the pump right now.
I'll just be honest with you, from a personal standpoint, that's always frustrated me about gas, right? Is that it certainly seems like when something dramatic happens, it is incredibly quick and incredibly dramatic to increase the prices. And yet, when things happen the other way around, right, we might remember in the pandemic, oil actually turned negative for a period of time, right, as the world was reacting to shutdowns. And we all don't remember gas going down to like $1 a gallon, right, on the other way around. So I hear you loud and clear. I wish I had some, an intellectual answer to tell you why it's so much quicker on the way up than down. But, for the people that produce it, they kind of control the prices and make profits. That's probably like a lot of companies that exist, versus the rest of us consumers.
I think people just like hearing that from a money expert as well. Now, when we see things like this, though, this may create an opportunity. Are there opportunities maybe in the world of renewables for investors who are looking to strike at something different right now?
One thing I want to caution people is if you are thinking this is an opportunity right now, remember the market has already considered this an opportunity. Like if you look at the XLE, which is the energy sector, right, ETF, that's up 40% year to date already. So you got to think a lot of that's priced in. Here's the interesting thing about things like electric vehicles or alternative energy. A lot of the stuff is 10 years down the road. Yeah. In the short term, higher gas and oil might actually hurt these companies, right? Because it's actually more profitable to produce gas. Whereas when oil is low, these things tend to get a little bit of a bump. But I would say over the course of the next 10 years or so, right, obviously that's a market that's going to be dramatically better. The interesting thing is I saw an electric vehicle analyst the other day say that right now, all of these electric vehicles would have to have 120% market share 10 years just to build in the price of what they're already at today, which is essentially saying I'm not sure there's really a great opportunity in the short term to invest in these alternative energies. I think a lot of it's priced in for the long term a little bit, to be honest.
All right, Brad, just about 30 seconds. Real short answer, if you could, I apologize. But inflation, how much do we need to worry about it continuing at the scary pace it's been going at?
We need to worry. Yeah, I've been on here for the last couple of months saying that, the short term when it comes to an economy is a year or two or three. So the word transitory isn't being used that often anymore. Inflation is a big product of what happened for COVID. Keep in mind that one thing that's kind of interesting with oil is that if this continues to happen and oil is high, it might cause the Fed to actually slow down the tightening, which means lower interest rates for a little bit longer than we thought. But overall, inflation's a problem, and this gas is really bad timing as far as adding to that inflation.
Senior Wealth Advisor Brad White, thank you so much for your advice. Glad to hear that you're just as frustrated as all the rest of us with the prices at the pump
no doubt,
and how it works out that way. We'll talk to you again soon.
Thank you, Carl.